It's about that time of day again. My name is Joseph. Wednesday evening, September the 5th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, we have crude oil. Crude is bearish with a wedge pattern tonight. And like any wedge, it tells me to look for selling opportunities using buyer failures, and my focus is on the swings around that edge. Grab a chart in that, look at that in just a moment. Got the S&P range bound tonight with a triangle. That tells me to focus on failures to buy the low and sell the high, but I'm waiting for a 1, 2, 3 breakout tomorrow. I think we definitely will possibly see that breakout because we're getting to the narrow part of that triangle. More to come on that in a moment. Nasdaq is bearish with a spike in range pattern, and that tells me to be looking for selling opportunities using the 2-try rule up above the range high tomorrow. Gold is bearish as well with a flag pattern on gold. Quite the interesting chart tonight on gold. I'm going to tell me to look for some selling opportunities using a breakout pullback pattern to the downside tomorrow. Don't confuse this gold market with a bull market. We'll take a look at that in a few moments. And of course, we'll wrap up tonight here on the euro. Euro is bullish with a strong bull run into a range to finish today's session, and that tells me to look for buying opportunities using seller failures below the low of that range tomorrow morning. Speaking of tomorrow morning, Thursday morning, we got a bunch of news tomorrow morning, and we got some interesting scenarios. E-minis were reacting to those court proceedings today on Capitol Hill. We got some big news on the oil. I got a great plan for you guys though. Bunch of opportunities setting up for Thursday's session. But before we jump in though, we'll put the plan together. I do want to remind you, if you watch me this evening on YouTube, you can find a detailed description of this entire strategy tonight written out right here on my blog at sidewaysmarkets.com. I'll leave the link in the description of the YouTube video. Also, if you have any questions about anything covered in the video tonight, please remember you can post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing, and don't forget to hit the bell icon so you get notified every time I post something new. And of course, don't forget, if you really want to stay in tune with everything going on here at School of Trade, head over here to the blog at Sideways Markets. This is where all the action happens every day, and make sure you join our mailing list. That's right, give me your name and your email address in the upper left-hand corner, and I'll shoot you an email every time I publish something new. If you're on social media, I'm always posting charts, links, updates, videos, quotes, all kinds of great content on my social media channels. You can find me on StockTwits, Twitter, Facebook, LinkedIn, right, and a link to my YouTube channel in the lower left-hand corner. Don't forget, you can download all the charts from tonight's video and have those ready on your computer for tomorrow. And speaking of tomorrow, if you're not a member here at School of Trade, I've got a free pass for you. Come out and join me in the trade room as a guest this week. Grab that free pass in the upper right-hand corner. That way you can get behind the curtain, see what it feels like to be a client, and get a much deeper dive into the trading strategy that we trade every day in our trade room. Sound pretty good? Again, grab that newsletter, join our newsletter mailing list, right? But first, buckle those seatbelts. We got a busy video for you guys here tonight. Lots going on. Let's start first by taking a look at tomorrow's schedule. Tomorrow is Thursday, September the 6th. What do we have here on the schedule for tomorrow? We've got, of course, that ADP employment number coming out tomorrow morning at 8:15 Eastern Time. Now, that sounds like a pretty important news report. It's not going to be that important for tomorrow morning, but it will be important as a kind of a backdrop for Friday morning's employment number. And I have a technique of using these two news reports. Usually this ADP employment number is usually on Wednesday mornings, right? And we talk about that usually on Wednesday mornings. Again, with Monday being a holiday, though, it is tomorrow, Thursday morning. Again, we're not going to use it tomorrow, but make sure you come back tomorrow night and check out my newsletter tomorrow night, because I'll show you how I can use that number, right, to help me trade the number on Friday morning, right? So you won't see too much of a reaction to that tomorrow, but be aware that is going to set the stage for Friday morning's non non-farm payrolls. Jobless claims report, it's never a big market mover, but we got a bunch of news coming out tomorrow morning at 8:30, jobless claims, right? Productivity and costs and PMI services. So we may see this kind of get things moving here, right, early tomorrow. But typically, though, that jobless claims report isn't going to make too big of an impact. Really, it looks like tomorrow most of the news is going to be piled up in the latter half, right? Kind of the late half, right? The second half of the session. We got factory orders and ISM non-manufacturing. Those, of course, both happen at 10 o'clock. Remember, 10 o'clock Eastern time is a big volatile time of session. I would expect tomorrow morning between that 9:30 NYSE opening bell and that 10 o'clock shock, as we call it in our trade room, I do expect that to get the market moving for probably the big move of the day tomorrow. So I wouldn't use that as an excuse to sleep in tomorrow because you never know what's going to happen. But looking at the chart right now, there just aren't that many catalysts early in the session. Obviously, we've got some hurricane stuff happening right now in the Gulf. We obviously have, right, some stuff happening on Capitol Hill. Never a dull moment. So don't get me wrong. We may see some catalysts that are not scheduled catalysts tomorrow morning. But if I had to take it for what I know right now, I would imagine that big move tomorrow will probably be starting between 9:30 and 10 and giving us that run right into the end of the session. Just like we saw today, right? A little bit slow start of the day today and then a nice finish, right, with some big movement towards the end of the morning. And then don't forget tomorrow as well, we get the inventory report at 11 o'clock Eastern time. Again, Monday was a holiday. This is typically on a Wednesday at 10:30. The good news about this, there is some good news about inventories. As you know, I'm not a big fan, especially for new traders, to be trading the news. I'm not a big fan of news trading because it puts you in a position where one bad move can end your career. And I'm not talking about financially. I'm talking about psychologically. You take some big losses, and it's tough to rebound from that. I've met lots of traders who did pretty well until they had that one big debilitating hit to their account, and they never could really overcome, right, that psychological damage that came with it. So, again, I'm not a big fan of trading news. My opinion is there are so many more reliable ways, right, to make money every day. I've met lots of traders that make money trading news, but again, I equate this to being a situation that can literally, again, end your career. And those are those situations that you just don't want to put yourself into, right? It's like driving an automobile 100 miles an hour without a seatbelt. It might be good for a rush, but you make one bad decision there, one mistake, one rock comes out of nowhere, right? And you're going to be putting yourself in a life-threatening situation. And that's what happens when you trade major news events. Take that for what it's worth. Not my cup of tea to trade news reports, and I highly discourage new traders do that as well. Not at least until you have, right, at least 6 to 8 months of consistent reliability in your trading. The good news tomorrow, though, is that 11 o'clock news report means we have almost a full session, right, to trade oil. Normally on inventories, we're cut at about 10 o'clock. My cutoff tomorrow is probably going to be around 10:30 Eastern time. Inventory days for crude oil, remember, they are a different animal, right? The whole day is different. So you really got to be careful. Take it right. Take it for what it is. Tomorrow, if we're really, really slow on oil, which does typically happen on inventory days overall, be careful, right? Don't force it. We'll go find markets that want to move tomorrow morning. But hopefully tomorrow, right, hopefully we can get a little more headlines coming out of the hurricane season here. Hopefully tomorrow we can get some stimulus early in the morning. We'll get some good opportunities before this thing slows down ahead of that inventory report tomorrow morning. So 10:30 is the clock ticking tomorrow morning, again, for all you oil traders, right? Only applies to oil futures. So again, tomorrow morning, 9:30 and after. Again, if I would guess right now, 9:30 to 10, we'll probably see something starting to brew, and then looking for that end of the morning push here tomorrow. But again, don't sleep in, right? Because we know that tomorrow is going to be the last full day of trading before we go into non-farm Friday. And there's a lot of importance to the psychology behind that, right? If you're working a job for a major trading firm, your boss has probably already told you tomorrow's the last full day of the week, because on Friday, you've got to wait and see how that news comes out. If you're trading other people's money for a firm somewhere, tomorrow's your day, right? It's not non-farm Friday, right, as many experienced traders know. So I'm hoping for the best tomorrow, but I'm realistic, right, again, with that Thursday being not a lot of news at the beginning of the session. All right, guys, so get there early, right? Stay late. Tomorrow should be a pretty good day. And, of course, don't forget, we'll see you guys at 8 o'clock Eastern Time in our trade room here at School of Trade. All right, so I apologize about that lengthy intro, but, of course, I want to make sure I cover everything here for you guys like we do every night on this newsletter. Now let's jump into some charts. We got crude oil, S&P, Nasdaq, gold, and we'll wrap tonight on the euro. Crude is bearish with a trading range, a channel, maybe a wedge, and a measured move on the chart this evening. Now, first of all, this trading range, which you see right here, and of course we know it's a trading range because we saw a strong move down, a double bottom off of that low, right? That tells you that's your trading range. You'll see a couple more examples of that, right, as we go later in tonight's video. The bottom line, though, is we were still riding that momentum from yesterday's big collapse, right? That gives the bears the edge over the bulls, at least for the time being, telling me now to look for selling opportunities up above the high of that range tomorrow morning. And what better place to sell than at the high of a channel? If I line up those lows up to those highs, boy, does that look like a very comfortable location to be selling above the top of that range, and again, trying to sell at resistance, in this case, up at the high, right, of that channel. Now, there's also potential, right, for this to be a wedge. If I draw a trend line down, draw that trend line down, we can see that wedge. Now, wedges are really, really powerful clues because they tell us when the wedge is really narrow, you can trade inside of it. But when the wedge when the wedge is wide, you can trade inside of it. Buy the low, sell the high, right? Avoid the middle. But when the wedge gets really narrow like this, there isn't much space to trade. So oftentimes we see nice big pulls back, right? And right back down to the target, which is the vertex of that wedge. You know, in all reality, wedges could be said to tell you three things. They tell me direction, right? The move going into this wedge was bearish, so I know direction, right? Location, follow the swings, right? These swings are usually going to be the best place to look for the sells. And it also tells me the target, because where those two trend lines come together, right, I call the vertex, right, whatever you want to call it, right, call it the target, call it the objective, whatever you want to call it, right, that is where the target is. That's a major level of support. So we can tell here right now, right, the only thing we really don't know tomorrow is that inventory report, right? The one thing we really got to watch tomorrow is time, right? I like to trade crude as early as possible on inventory days. Usually inventories are at 10:30. Tomorrow I realize they aren't until 11 o'clock, right? But that still only gives us till around 10:30 Eastern time, maybe even less. Again, we have to wait and see how much actual price action we'll get on an inventory day. So when you combine all this together, channel, right, that channel off the low, I want to sell the high, right, of that channel. The wedge, right, wedge starting to get nice and narrow here now. I want to go up, right, try to avoid trading in the narrow part of that wedge. And again, we got that range, right, get up above that range and sell it back down again. So all signs point to selling it high right now. So let's see what we can look for here tomorrow if the price runs higher. Now again, I'm really tuning in to these swings for that wedge. And then for the trading range, I'll take that trading range, I'm going to copy and paste it down, copy and paste it up, and that gives me a nice level of resistance. So this little area right there, that little area right there is really going to be our sweet spot. Now, if we go higher here, right, we're probably going to look a lot like this, right? It'll go above the moving average. So we go above the moving average, what's likely going to happen is we're likely now going to see those buyers now try to buy the pullback. Now, when they try to buy the pullback, the market's not bullish, it's bearish. And not to mention, we're at resistance, not at support. So the odds are not on the side of the buyers. The odds are actually on the side of the bears, right? In that case, I want to try to sell. Now, where could I sell where the buyers are starting to get into trouble? Now, why do I say that? Well, in my experience, some of the fastest money you'll make is when you're getting in while the other side of the market is getting out, or in this case, right, the buyers are getting out, right? So where can I sell at resistance? Selling at resistance, okay, target down at that low. Where can I sell now where I can get that little edge, right, where the buyers are being forced to exit from their positions? I can do it right below that low. So that's where I'm looking for that first tradable opportunity tomorrow. I want to see that. I want to see that. Nice jump up. Let those buyers try to buy the pullback. By the way, I call this the 2-try rule. You'll see some examples on that on the Nasdaq here, so stay tuned on that, right? I'm looking to sell right below that low. So that's the first one to sell on the way down. Now, as we go lower, you've got to remember we're coming back to the low of that channel, or sorry, back to the low of that range. I don't want to chase after this now. I want to sell at resistance. So let's draw a trend line down. Let's get that trend line up, and let's go up and back down we go. There will be my second opportunity at this point. So again, we call this, and you can repeat this with me, we call this a failure into strength, strength into pullback, and pullback, back down we go, right? We get a failure up top, right? The buyers fail. That leads to strength for the bears. When the buyer is getting stopped out, right, that slams the market lower, and then we look for that pullback to that hidden channel, right, as we go lower. So that's going to be my plan here if we can get this market pushing higher. And also, too, if you're here for the first time today, I realize a lot of this might have gone right over your head there. I'm using some terminology that isn't very common. You know, I'm self-taught. So for me, I don't use a lot of the same terms that you may have read in some of those popular trading books. So if you're here for the first time, I want to do you a solid here real quick and give you a free trading course. Like I said, I'm self-taught. I've really done everything in my career by making mistakes, and I'd love to show you how I look at the market. And most importantly, take that free course in the upper right-hand corner. I'll also link it up in the description of the YouTube video here as well. I'll show you hundreds of examples of these patterns, right? I'll also shoot you an invite. Come out and join me in the trade room, right, as a guest. So that's the plan if the market goes higher. What if we try to go lower here? What if we try to go lower? If we try to go lower, we got that measured move waiting down here. So I really want to wait as we go lower here. I want to go up and keep trying to sell off of that high. Now, the only scenario that could really be trustworthy is if we see this market run, right? If it really runs through this low. So we may see, right, if we continue this bearish trend here, it may really run as we go lower. If we see a real strong run down, not to worry, we'll call that a new bear channel, and we'll look to sell right off the high of that bear channel. But remember, the most important thing right now, though, is you got to see a lot of strength, right, going lower here. We've got to see a lot of strength going lower, because if this thing just kind of lollygags, right, on its way down, I'm sure you've heard that term before, right, probably from your grandparents, right? If it just kind of sluggishly rolls lower on this, I still want to try to go up, failure, and sell back down, right? So if it keeps on going lower, we keep trying to go up. Failure leads to strength. Strength leads to pullbacks, and pullbacks back down again, right? That's the plan here for the bears. Now, how would this market reverse? A reversal requires what we call a 1, 2, 3 reversal. And you'll notice I put the exclamation point at the end of that reversal. And the reason why is because that's what it's going to feel like. Now, look at the strong move going higher here. Okay, this is what typically happens. We typically see a strong move, right, profit taking. Then we see a pullback to the moving average. Now, if the buyers try to buy it and they can't hold, what's going to happen? It's going to fail back down, and I'm going to be looking to sell it as it fails back down. But if they can hold, right, 1, 2, 3, right, if we can get that strength, pull back to the moving average, and then strength on through. If we can get that strength, pull back strength, that 1, 2, 3 reversal, then we can find a new bull channel. I'm going to mark up these prior swings, make those levels of support, and we'll look to buy on the pullback. You can usually find a great trade coming up the low of that channel, and if I can, combine those prior swing highs, because those reversal lines will always make for excellent levels of support. So that's the plan for oil tomorrow. Let's keep moving though, because I got a lot to cover here tonight, and I realize that intro ate up a bunch of my time here with you. Let's keep going. How about some S&P? Boy, the S&P must have been hanging out with gold today. If you watch gold today, you know what I'm talking about. S&P is range bound with a triangle on the chart this evening. There's not much on the chart. The bears started with control, but as you can see, they finished the session back in the middle of the range with lower highs and higher lows, creating a channel. We began the session with the bears in control, okay? And make note of this. We really never saw the bulls take it over, did we? We saw a strength pullback, but we didn't see the follow through. So if I had to guess right now, I would guess the bears have a slight edge right now over the bulls. You could also look left and say, yeah, we're moving lower here overall. So if somebody put a gun to my head and said, Joe, you've got long or short tomorrow, which would you choose? I would definitely choose the sell side. And with us seeing lower highs and higher lows, this would be a bear bias into a triangle. Now, triangles are really great patterns. They're kind of like wedges, in the sense that you really want to focus on the swings, focus on those edges, because that's typically where you're going to get the best buying or selling opportunities. Now, another important thing about a triangle is, just like the wedge, is the vertex, When this becomes really narrow, it oftentimes leads to a big breakout, Now, that might be that timing middle of the session tomorrow morning, We talked about how there wasn't much of a catalyst tomorrow, until after about 10 a.m. Eastern time. So keep your eyes open tomorrow, later in the morning for that big breakout out of this triangle. But here's what you're ultimately looking for here on that triangle. You want to fade these moves. At any time I see a trading range, lower highs, higher lows, flat moving average, no real trend, and very little personality, I might add, I want to fade those breakouts. We want to use what I call the two-try rule, The two-try rule is going to look a lot like this, where it goes up, back, up, and down, It'll look like this: down, back, down, and up, So as we go lower, let's say we go lower here, for example, I want to see the break lower. I wait for a pullback to the moving average. I don't try to pick the bottom here, because it's very difficult to tell when we're going to get that breakout. They all look the same. So what I do is I wait for that strong breakdown, let them pull back to the moving average. Let those sellers, the sellers, and again, it will look a lot like this, The sellers will come in and they'll try to sell off that moving average. Once we see those bears in the market, one try, two try, now we know where their stop losses are. Now we know where the pain begins, And we said earlier, on the oil, how do I sell oil off the top of that channel? Because that's where they start getting into trouble. Yeah, this is where the pain comes in. So if the market runs higher here now, how far do you think those sellers are going to let this trade go against them? And eventually they're going to have to pay the piper. They're going to have to buy their way out, and the market will slingshot back in the opposite direction. The key is don't try to buy that first leg down, Because sometimes we get it like this, where it goes one try, two try, it's a higher low. But I'll tell you, a lot of times it does this: one try, two try with a higher high, So you can't really predict whether or not you can just buy that first move back in. This is not a reliable pattern to take. So as we go lower, one try, pull back to the moving average, two tries, and looking to buy it going back up into that range. And if we really get lucky, it'll be a one try, two try. Again, it's a failure buy above that high, above that swing, And if we really get lucky, right, it'll give us the pullback as well. We jump up, we get that new channel coming off that low, and now you can see, right, I can combine the low of that channel along with that prior swing as well. So there are really two opportunities we're looking for. Usually though, right, we're going to get that first one. The second one is really the variable as far as how the trade sets up. Again, there is a slight bear bias to it, so one try, two try, failure, strength, pullback, right, and back down. Just like I mentioned earlier, right, that sequence we talked about on oil. And again, you can see literally hundreds of examples of that exact pattern by taking that free trading course. I'll link it up in the description of the video, and I'll put it in the upper right-hand corner. So that's the basic plan. Right, one try, two try, back in. One try, two try, back in. Now, what if it sits here and goes sideways? Then what? Well, not much changes. We're still waiting for the one try, two try, back down. One try, two try, back up, right? If we go up, we go down, right? But if we go sideways, just stay patient, right, and wait for those breakouts. Now, we talked about potentially there being a breakout of this range tomorrow, because you'll notice we're right at the kind of the edge, right, the vertex of that triangle. What would a range look like? What would a range breakout look like? Again, it's called a 1, 2, 3 breakout. Yeah, I borrowed that term from the 1, 2, 3 reversal, right? This is the cousin of the 1, 2, 3 reversal. And again, this one's got 2 exclamation points at the end, right? You know what that means, right? It's got to be on strength. So 1, 2, 3, right? It's got to break out, pull back, and run, right? The run is up here. Okay, because we see a lot of times where we see a big breakdown, but sure enough, they can't get it. They can't hold it, right? And it will reverse. Strength, pull back to the moving average, right? Strength. Nice, big, strong move. At that point, we don't chase after it. We mark up that prior swing, find the new channel. And again, I'm looking to buy the low of that channel, looking to buy that reversal line, right? Those are going to be the two most reliable areas to look for that buy, right, going higher. All right, guys? And that goes for both the bulls and the bears tomorrow on the S&P. And hopefully the S&P drinks a coffee tomorrow before the opening bell, because it was a little bit slow to finish up today's session. How about some Nasdaq? Nasdaq is bearish with a spike and range on the chart this evening. This is a little bit different than a typical range because, as you can see, right, the day started off with a strong move lower. Then we saw the double bottom in price, which we talked about in last night's newsletter, right, which always confirms we have a trading range. Now, trading ranges are actually more common than strong trends. That's why I cover a lot of my trading range analysis in my free trading course, so make sure you grab that. It's linked up in the description. Now, anytime, right, I see that bear market into a range, I now know it's a range with a bear bias. So that range now tells me to sell using what we call the 2 try rule, right? And you can see a great example of what we just discussed on the crude and on the S&P. You can see we got that right shortly after lunch here this afternoon. So now here we are. We're back down to the lows. We're kind of hanging around, right? Kind of hanging around, rotating inside of this range right now, and we're just waiting for another opportunity to sell this market back down again. Now, a lot of people always ask me, right, when there's a bear bias, can I apply the same technique to the downside, right? Can I use that 2 try rule coming off of that low? And if you're shaking your head right now, right, you watch my newsletter often, so congratulations on that. We can look for, right, that 1 try, 2 try, failure, strength, pullback, back down. I can do that off the high, right? 1 try, 2 try, again, failure, strength, pullback, back down again. I can do that off the high because we have that bear bias, right? But trying to do it off the low, this is where things get a little bit tricky. Now, first of all, if you're going to try to buy off of this low, we're going to take that trading range, measure the amount of the break higher, bring that down lower, and that creates a support level around 74.83 we'll say, right? That also lines up with that range. Take the range, copy and paste it up. You can see that use it as resistance, copy and paste it down. We'll use that as support. So I really, really like this area at 83, right to 86 down here. What I really want to see for the most confidence to buy off of this low, what I'm looking for is a 1 try, 2 try. And what you really want to see here is you want to see it get to that low, get to that 86 area, 85 area, really make sure it pushes. Get a lower low in price. Okay, that's the trick here. You really want to offset your risk on this. Maybe not offset the risk, but offset the odds of this, because again, the market's bearish. And what you're looking for now is, right, it's now for this moving average coming down, and you're looking for that breakout pullback. Right, back up we go. You can see a little example of it right there. It doesn't look good on this chart, right? But that will be the example, right, you're kind of looking for here. So again, the first thing is get a nice deep move lower, right? Don't try to take this thing off the low of the range, right? Take it outside the low of that range. Then the second thing is get this, right? Get this 1 try, 2 try, and get a lower low. See, a lower low gets breakout traders, right? A lot of traders still try to trade breakouts. They're in the old trading books. A lot of rookies still think that trading breakouts is a good idea. And I hope they do, because it makes my job a lot easier as an experienced trader. I know it sounds kind of bad, but that's the way trading works. You know, experienced traders basically just take the money from the inexperienced traders. The inexperienced traders pay it as a tuition, right? And of course, right, it's kind of like an annuity, right, for the experienced traders, right? Let's be honest here, right? If you know what you're doing, all you're really doing is capitalizing on the mistakes you made 10 years earlier. So the bottom line is that I want to get these breakout, right? I want to get that lower low here, because that's going to get breakout sellers. It's also going to make people think, oh, look, it's broken out, right? But we know a successful breakout has to be on strength, right? This is not a strong breakout. This is a strong leg down, but it's not finishing this move. Now what I want to see is us get right back above that moving average, right? And look to buy it on the pullback. That's the trade that you're looking for. The only thing, again, is get it nice and low, get that 2 try rule, right? Get that 2 try rule. Be very careful with something like this that goes strong move down, right? That comes up like this, because a lot of times what will happen is if you don't get that lower low, they're going to be sellers waiting up here, and they're going to make you pay for that mistake, and then they will get that lower low. You'll end up seeing it like this, right? It'll do this, trap high, run lower. That's your lower low now, and then while you're getting your behind whooped, right, it runs back higher, right? Just as you get stopped out, right, it's laughing at you as it runs back up into that range, right, tomorrow. So don't fall victim to those breakouts, right? Make sure you focus on going back into that range until we get a 1, 2, 3 breakout, right? Which, what does it look like again? It's a strength, it's a pullback, and it's a strength. And again, look how strong this one was, right? That was a real strong move higher. Surely that was enough to get the buyer. Nope, right? Back into the range again. So don't just try to predict, right, those strong breakouts. Breakout, pull back, go. Make it hit the moving average, right? Then grab that high, up to that high, down to that low, and we're buying that pullback. Now, if I had to guess, you know, remember, this whole move lower today kind of came on the back of that testimony. You saw a Jack at Facebook, and whatever that chick's name is, I don't mean chick, whatever that woman, she seems like a nice person, whatever that woman, her name was, I think it was Cheryl or something like that, from Facebook, right? You know, Zuckerberg's already had his time, right? He's already had his fun on Capitol Hill, right? I'm sure he was a little bit tired of that. So, you know, we had, you know, Facebook and Twitter, right, on Capitol today. It looks like that was what drove this thing lower. Everyone's thinking regulation, right, of social media, and because social media is pretty much, you know, take away Amazon, it's pretty much what drives the Nasdaq right now, the FANG stocks. So we could easily see this back into that range. I mean, let's be honest, right? Tomorrow morning, we could easily find ourselves making a run back to that 76, right, 44 area. But it will start with a strength, pullback, strength. then we find that new channel and we're buying that move on the way back up to that high. And this really, in all reality, if we go back to those highs here, this could turn into a pretty good bull run, right? All the way back up to retest just shy of that big round number there by the end of the week, right? I mean, if we get momentum back in the hands of the bulls here, I mean, what makes us think that we're going to stop right here? Right? Remember, when momentum gets going, it's tough to stop it. So we may see it really run. We could find ourselves back to that 7,700, right? Lickety split here tomorrow, maybe Friday. We'll see, right? We'll see how it goes. If it goes to the downside, obviously, right? Strength, pullback, strength. Right? I'm sure a lot of folks are cheering on this move going lower, right? And of course, we're looking to sell right off the high of that. I don't dare touch that first pullback, right? Because again, you just can't trust a breakout. Wait for the second one, because as I always say, a professional trader needs to learn to trade profitability for probability. Yes, I might be able to make some more money on that trade, but it's only about a 25, maybe 30% winner, right? I can literally triple that win, maybe not triple it, right? But more than double that winning ratio, right? If I just wait for a little more proof. And I'd rather make a little bit less money today for a whole lot more money over the longevity of my career by trading with markets or trading with patterns that are more probable, right? That have a higher probability. So again, that's the plan there on the Nasdaq. Pretty detailed there tonight. We'll see what tomorrow brings. And again, tomorrow morning, 8 o'clock Eastern time, we'll be there together. And then we have, you might want to get the kids out of the room for this one. This is a pretty ugly chart here. Wouldn't want to have them seeing the gold chart and their nightmares tonight. Gold's bearish, right? With a flag, a trading range, and a round number on this kind of a pathetic looking chart tonight. Gold is definitely a bit of a head scratcher today, right? Price action was, at best very sluggish. At the worst, it was just horrendous. You can see the price action wasn't that great today. But it's easy to see, and this is one of the reasons why I tell people trade a strategy that has the ability to work on every market, right? We saw this really sluggish here today, and we just skipped it, where we focused on markets, right, that were actually moving. It's very important that you don't waste your valuable time each day. We only get so long to trade. When you see a market doing this, this morning here on gold, right, go find easier markets, right? Euro was easier, Nasdaq was easier, even the S&P, right, was easier today, right, than the gold market, right? Don't wait, don't sit there waiting for this market to move. If it's not moving, go find something that is moving and make sure you're trading a strategy, right, that can do that right along with you. So it's easy to see, real quick here, it's easy to see the bears had control, right, at the end of yesterday's session. The big question is right now, do we see the bulls having control right now? Give me some evidence where we have enough proof where the bulls have taken this back. And that's the big point I want to make, right? We've got to keep looking at this market like a bear market. Remember, when the bears take control, the bulls don't just get it, right? The bulls have to take it. And what does it take for the bulls to take control? Strength, there it is right there, a pullback, and strength. So as of right now, guys, I don't see it. I don't see this as a bull market. I see this as a bear flag, right? As a bear flag. And bear flags are, this is an ugly, ugly, ugly one. This is a bear flag that fell out of the ugly tree and hit every branch on the way down, landing on its head. And so we got a flag pattern. The key to a flag pattern is that breakout pullback, right? It's that strong move down and that pullback back to the underbelly of that channel. For the most part, that's going to be your most reliable way to trade a flag. I'm not going to say it's easy by any means. Flag patterns are, in my experience, one of the most challenging patterns to learn at first because they look like bull channels. But the reality is, though, is that it starts off with that big, strong move down. So in order for this to be a strong bull market, it's got to run, right? We don't get that run. So we're getting that strong move down. We're not seeing that run. In other words, we're not seeing the bears leave the building, pack up and go home. We see a strong move higher here, but again, that's only one leg higher, right? I do have this trading range. And so that range is, right, that range is a concern, right? So the bull channel right now is likely a flag. It does not look like a bull market yet, right? And anytime you see these types of sluggish, narrow, and almost flat channels after a strong move down, like we saw earlier, right, they're considered a flag rather than, right, a bullish reversal. Okay, so now I think at this point, the only real clue we know is that trading range. You can see we spent most of the initial part of the morning inside of that range this morning. This could easily be seen as a one try, two try, and now all I need is that strong move down, find that new channel, right, and sell the move back down. There really are two things, right? There really are two things we're looking for, right? So we're looking for this one try, two try, right? This one try, two try. I want to see its strength moving lower and then sell that pullback. Again, imagine this now, right, as a flag pattern here, right? It's a strong move down, pull back. I'm going to use that now to find my new hidden channel, right? And I'm looking to sell off the channel, sell off that channel, right? I'm looking for this area up here now, right, to be my area of resistance. But again, make no mistake about it, we still want to see that strong move down, right? Don't chase after it. Find that new channel now, mark up those lows, right? And then we're selling back down in from there. And we'll use traps, buyer failures, pullback patterns once we make that turn, right? In fact, I have a whole chapter on flag patterns in that free trading course. You can find it linked up, right, in the description or in the upper right-hand corner of this video. Now, maybe you disagree with me on this, right? Maybe you're thinking, no, Joe, right? The bears had plenty of time. Take this lower. This market's bullish. Okay, well, if it's really bullish, then we should expect to see a trap low into a run higher. Okay, watch for that tomorrow, right? If it really is bullish, if these bulls really want it, okay, your most aggressive buy is a trap low, right? That's why I'm not telling you to sell this right now. That's why I'm not trying to sell that move lower. You might be thinking, well, Joe, why not just sell it here? Well, because again, it does have that feeling, that little bit of momentum, right, to the upside right now, and I'll bet a lot of buyers are waiting to try to nibble on that right there. Right? Now remember, if they just blow right through it, no question about it, right? Find that new channel and sell on top of that channel, right? But watch here. Watch if they trap and then go. If they trap and go, now we find that new channel, right? And we're off to the races. I will gladly, and again, all you're doing here is, right? All you're doing here is you're trading a little bit of profitability for a whole ton, right? A truckload of probability. Right now, you really can't bank on the upside. But if we see that, and again, you're more than welcome to take that trap low. It's going to be, again, it's not going to be the most reliable thing in the world, right? But if you like a little bit of gambling in your life, that would be where I would go first, right? A little trap low, right? It'll come down. You'll see a nice little trap, right? And then bam, right? It'll happen almost instantly, right? It'll be within 2 candles off of that low. Then it will jump up. Once that jump up happens, then bam, we're on. Find that new channel, right? Again, we'll use those prior levels of resistance as support, looking to buy off of that low. So that's the plan here for tomorrow. If it keeps going sideways here, you keep waiting, right? Strength, pull back, go back down, right? If it keeps going sideways here, trap and go, new channel, buy and pullbacks back up, targets up around that 1209, right, 0.7. All right, guys, that's the plan there on the gold. Then wrapping up tonight on the mighty euro. Euro was a great market trade this morning, right? It took some time to get going, but it definitely got going here for us. Euro is bullish with a strong run higher, a trading range, a bull channel, a reversal line, and a measured move on the chart this evening. The strong run higher gets that momentum firmly on the upside, right, of the buyers, right? This strong run higher here That strong run higher, right, gets the momentum firmly on the side of the bulls and really ultimately telling me that any pullback here right now is probably going to be seen as a buying opportunity. And what better place to look for a buying opportunity than at the low of a channel. Now this channel could be nice and deep. It could be that channel right there, but it looks like they're really loving on that trend line right there. So that channel low would be right there. And then of course, don't forget, right, the low of that channel also lines up with one of my favorite types of support, a prior swing high that I can use as a support level here for tomorrow. Most important clues here are that strong move up into a trading range with very similar situation, but the opposite direction, right, on the gold, on the Nasdaq. So we know we're looking to fade the breakouts. We want to use that 2-try rule to buy low. 1 try, pull back to the moving average, right? 2 try. If I can, I love it when we get a lower low in price. That's always great. But I'll tell you, sometimes they look like this. Strong move down, back to the moving average, little tiny red candle, and then back up, right? That's an example of the same thing too. It's just not as dramatic. So sometimes, right, sometimes it'll do this. We go 1 try, 2 try, failure, strength, pull back in. That happens all the time, right? We saw it right here, right? Good example right there. Failure into strength, strength into pullback, right? And pullbacks going back up. I'm not making these patterns up, guys. And again, right, I got hundreds of examples of these patterns in that free trading course, right? It linked up in the upper right-hand corner. Grab that information, right, that information icon, and grab that free course and learn these patterns because you don't need to overcomplicate things. You can keep it nice and simple. So 1 try, 2 try, failure, back up, right? Don't forget how to reverse strength, pull back to the moving average, right? Strength, pull back to the moving average, and strength. If that's the case, find that new channel, mark up that prior swing, and looking to sell off those highs, right? Looking to sell off those highs. Target, of course, is back down to retest that low. What if price keeps going higher here? Now, the most bulletproof way to trade a move going higher is going to be a 1, 2, 3 breakout, and then find the new channel, use those levels of support, and buy the low of that channel. That's going to by far be be the path of least resistance. Okay, you can try to predict the breakout, 1, 2, 3. You can try to predict that breakout. If you do want to try to buy the pullback, what you need is what I call a fake out breakout pullback, which is a strong enough move higher. How strong? Strong enough to get that moving average above the high of that range, right? And then 2-legged pullback into a buy, right? So that would be the only scenario where you could justify buying the first pullback. Again, strong breakout. I call this the fake out breakout pullback. So it basically tries to get the bears to sell this thing back in, and then of course once they fail, we're buying into their stop losses. That's why I call it a fake out breakout pullback. It's a little bit of a play against those bears, right? Because a lot of times what'll happen is you'll see it go up, it'll pull back, and it will fail and go back into the range. So what I do is I play that against those bears. Strong move up, get the moving average above, right? 1, 2, get those bears trying to sell this thing back down in. We know where their stops are, and I'm buying into their stops, right? It's a very easy pattern. Again, you'll learn more of those patterns inside that free course, which is linked up in the description. The much easier way to do it, though, is if we don't get that big break higher, the easier way to do it is just 1, 2, 3, find that new channel, right? Buy that low, and you're up to that measured move. The measured move's a little bit funky because you're starting off back here, 1, 2, 3. This is kind of like an Elliott wave, 5 wave, right? 1, 2, 3, of course, the impulse wave, right? 4, and then 5. You can see they pretty much come back into the territory of wave 1. So it's not officially, I don't want to get beat up in the comments here, right? I do realize it's not an ideal. We didn't make the 382 extension on wave 3. So it's not really the ideal Elliott wave pattern, right? But it's similar. And usually when we get that big impulse, right, that runs through the measured move here, usually the follow-up move is going to be that. Again, it's all coming off of that first leg higher. So I'm calculating it there, and that will give you that measured move, right, for that target overhead. All right, so a little bit more complexity there. You know, I want to teach as much as I can here every evening. And don't forget, right, I teach all these tricks that I've learned over the last 10 years of trading and teaching every day. I teach all of this every day to our clients right here, right in our trade room at School of Trade. We open up the trade room every morning at 8 o'clock Eastern time with all of our advanced members, right? Grab that advanced course right on our website. If you're not ready for membership yet, I've got a great free trial. That'll shoot you over an invite. Come out and join me in the trade room as a guest. It's worth your time, right? I've had tens of thousands of people so far, right, that have taken this, right, this free trading class, and I've helped not tens of thousands, but thousands of clients, right, in my trade room over my 10-year career. It's been great to help you tonight. Hope you learn more about how I trade. Hope to see you tomorrow in the trade room, and if not, hope to see you back here again tomorrow night, and we'll do it again for our next edition of our nightly newsletter. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos.